So Nvidia just gave their guidance for their updated Q4 earnings report, and the stock price tanked almost 15% on the day. And so a lot of that has to do with the fact that there were a lot of headwinds and a lot of worrisome news that came out from the company that investors were relatively fearful of. And in this video, I'm going to be going over exactly what the company said, kind of how that fits into my overall thinking of Nvidia as an investment and what I think that means for the company over the long term. So in this video, I'm going to be going through exactly, what the company said, how I think about, what that relates to the company, what that relates to the space, and in all, how do I value the company and whether I think the company is worth investing in today after the dip. So if you guys are interested in that, make sure to hit the like button, make sure to hit the subscribe button, and make sure to hit the bell notification so that way you guys get updates anytime that I put out new content, and because I'm going to be trying to cover all these companies that you guys care about as often as possible. So without further ado, let's get in the video. So what exactly happened? Nvidia came out with their updated guidance for Q4. Now this is the second time that they've updated guidance in the past couple of weeks, and now they've changed their EPS expectancies from $2.70 a share to $2.20 a share. That represents almost a 20% reduction in the amount of EPS that they were expecting out of the next quarter. And a couple of other things that the company pointed out was that the China growth slowdown is even worse than they anticipated, and they think that it's going to continue on for the future. And then they also noted that there is an alarming amount of data center growth that is slowing down, and it has not really started to pick up again. And I kind of wanted to touch upon these points individually, and I kind of want to address, what realistically, if you've been following the company, if you've been following anything in the, the consumer tech space or in the semiconductor space, what exactly out of this update is that new? And what of that is not, say, expected in the company, in my opinion? So we talk about the EPS droppage. Now, obviously, once Nvidia came out of their RTX line, that has not been selling that well. And coupled with the fact that data center growth has also been slowing down, the company just isn't selling as many units as they expected. And also, their margins for these units are not as great as the GTX ones that they have been over the past couple of years. And a lot of that has to do with the fact that it's new architecture. They've never really built these GPUs in this exact way. So their costs were, marginally higher than they were for GPUs in the past. And while they were charging a premium, they weren't being able to sell as many units. One, because of the premium, and two, because the technology that they kind of innovated on and they really packed in all these GPUs feasibly isn't used by the majority of any industry, and it doesn't really have any impact on, say, a game, or in the majority of gamers just don't really need ray tracing in any of the games right now because only a few titles support it, and the titles that do support it, a lot of the experience when you actually use ray tracing isn't really that beneficial when you think about the amount of FPS and performance that drops off when you incorporate it. China's economy seems to also be one of the other biggest factors in all these tech companies, and that is only to be expected. China is the second largest economy in the world, and it is experiencing major slowdown. A lot of that has to do with the fact that a lot of companies are moving their, their headquarters out of China. They're moving a lot of their manufacturing out of China into like Taiwan and India. And between all the trade war and all the tariff talk that's going on between President Xi and President Trump, a lot of people are very worried about what this means for the Chinese economy over the next couple of years. Now, so obviously, if Trump wanted to, impose a 25+% tariff on the Chinese economy, that would take a massive dip on the overall stock market in the Shanghai index, and it would make a lot of companies not nearly as profitable as they had been, largely due to the fact that a lot of these companies are getting subsidized by their government. Their government is, kind of dictating what they want out of their economy, the kind of top-down approach to their economy. And a lot of these companies have, say, low debt, or they get as much financing as they want because the government is taking a position within the company. And so if the overall government is not doing that well, it is very different than, say, here in America, where businesses can kind of, do their own thing and they don't really have to pay that much attention to what's going on in politics. Most of these companies are getting directly affected by what happens between the US and China. So this is going to be kind of a looming factor that may or may not get resolved over the next couple of years. So the fact that this is kind of being, kind of brought up time and time again, I don't think is anything new, but I definitely think that people aren't really taking into consideration how big of an issue this was, 9 months ago when it first started to talk about, or something like that. And I think that right now we're starting to see the actual impact of all these major companies that are kind of realizing like, oh, right, tariffs are actually going to impact our overall operations, and they really don't know what to do with that other than just say that they're going to be lowering their guidance. Now, the data center growth slowdown is something that I think has been brought up time and time again, at least here on this channel, but also any semiconductor company or tech company that you guys have been following. If you've been following them closely for more or less a year right now, we have kind of seen the fact that data centers can't physically grow at the rate that they wanted to. So you had Intel coming out with, pushing back their 10 nanometers, AMD attempting to pick up the slack, AMD not being able to pick up the slack, companies like Micron not selling out as many units as they wanted to because of the data center slowdown. The fact that people were kind of caught off guard that Nvidia is just reassuring the fact that we've known time and time again from other companies in this space that data center growth is slowing down. A lot of it to do with China and a lot of it also to do with the fact that we're nearing the end of our economic cycle. It's relatively interesting to see that just the fact that, okay, another company bringing up the fact that data center growth and cloud computing are slowing down after years and years of extremely fast growth, people are kind of shocked and people just really don't want to think about it until every single company in the market decides to say, yes, okay, in fact, data centers are going to be slowing down and cloud computing is also going to be slowing down. So these are things that, in essence, I don't think are that, surprising to investors. I really think that a lot of this is the fact that a lot of people got very complacent. They expected to just be trading off of forward earnings, expecting that the fact that, okay, because we had, 5-10 years of massive growth in all of these segments, it's going to continue, when they didn't really pay attention to all the warning flags that were kind of going around, over the past couple of quarters. And now that it's just kind of blowing them in the face, people are really starting to get worried and they're starting to realize that, okay, that ship might have already sailed and I need to get out quickly. Now, reiterating the fact that, okay, in my opinion, none of this was not expected. So you have Apple, Intel, Micron, and AMD over the past couple of quarters have all mentioned that China and or data centers have been the bane of their existence, with the fact that the growth slowdown has directly affected the amount of units that they've sold, and Nvidia is no exception to the matter. So Apple is not selling nearly as many units as they expected in China, largely due to the fact that if the Chinese economy isn't doing that well, they're not going to be buying the high-end premium smartphone. That also affects companies like, say, Intel and Micron, because if Intel, largely due to the fact that Intel wasn't able to put out their chips in time, but if China is not, buying chips in bulk and they're not expanding, extremely fast as they have been in the past, Intel's not going to be selling that many CPUs, Micron's not going to be selling that much RAM, and if you're not upgrading your data centers, feasibly you're not going to be upgrading your GPUs for those data centers either. And with data center market being the majority of the revenue for the majority of the large semiconductor companies, that is something that is kind of alarming, and it's something you definitely need to be paying attention to if you're invested in the semi space. Now, I've said it time and time again here on this channel, the fact that Intel has had to continuously push back their new product line, and the fact that AMD attempted to really pick up the slack, but AMD was not able to meet the demand of the people that they had, and also the fact that because AMD's new architecture, while it is amazing, it has still not stood the test of time, such as Intel counterparts. So not a lot of companies are jumping on the AMD bandwagon, and they were all kind of holding out for Intel. We've seen this back since 3 quarters ago with Micron, and the story really hasn't changed. And I personally don't expect the story to change at all, at least until the second half of 2019. But if macroeconomic trends continue to deteriorate, I can totally see the fact that the slowdown in the semi space and the slowdown in the data center and computing growth space are going to continue to go down at an even faster rate than people are expecting. Because again, as I've said multiple times, the second that economics start to really go downhill, tech and tech innovation are the first things to get cut, because companies immediately stop trying to expand and increase their revenue and they start to cut costs in order to stay open. Another thing I pointed out ever since I made this video on where I went wrong with Nvidia is the fact that the RTX lineup hasn't really wowed anybody, and the fact that the RTX lineup is extremely overpriced, in my opinion, for the amount of computing power you get for the average user or for the average application. It doesn't really make sense for many people to be rushing out to buy these GPUs. Now, obviously, yes, they did introduce ray tracing, and they are the strongest GPUs on the market right now, but the real-life application of ray tracing in large isn't really used by the majority of Nvidia's partners. So the fact that their newest GPU lineup isn't selling that well, and all of the trends and all the markets that they're in are also slowing down, it only means bad news is in the future for Nvidia. And until those trends start to revert, the company is going to continue, missing numbers, lowering guidance, and continuing this endless trend. And one of the other things that, isn't talked about as much after their last earnings report is the fact that the crypto boom was such a big part of Nvidia's market, and they did not realize how much of an impact that had. And I still think that the residual slowdown of the GPU demand because of the crypto boom slowdown, I think that is still putting a lot of pressure on the company, and I don't think that is going to be reverting anytime soon. And so I think the company is still kind of working out the fact that, okay, we're going to be expecting significant slower growth than we anticipated, largely due to the fact that, one, everybody is kind of slowing down and everybody's stopping to put money into, technology and data centers and things like that. But also with crypto being such a large portion of their revenue and with Bitcoin being down, north of 80%, I don't think anybody's too keen of rushing out to go and build a mining rig. So I definitely think that all the headwinds that I talked about in my last video on Nvidia are still present to today, and I don't think the company has any clear reason as to, kind of incentivize investors the fact that, okay, we know how we're going to handle this, we made a plan, and this is what we can expect, and this is how we're going to execute. I think Nvidia is still caught with their pants down here, and I really don't see the company reverting this anytime soon, especially not with the way that the company's been executing over the past couple of quarters. Now, so that all of the bad news and all the headlines are out there, what does this actually mean for the company? So over the long term, in my opinion, Nvidia is still going to be the #1 GPU manufacturer in the world, and I think that their GPUs are going to continue to be the best of the best when it comes to this space. Pretty much every growing tech trend, from Internet of Things, autonomous vehicles, AI, deep learning, everything like that, are extremely dependent on GPUs, and I definitely think that the demand for GPUs are only going to continue to grow over the long period of time, but that doesn't mean it's going to be in a straight line, and I can totally see a couple of years, in fact, of significant slowdown in the demand for GPUs. However, I do think that over the long period of time, it would only make sense that our demand for GPUs are only going to go up exponentially from here. And once their RTX line and their ray tracing technology is actually utilized by the majority of gamers and institutions, I can definitely see that Nvidia is going to kind of have the, the first in market in this space, and I think that their technology is going to outperform AMD's technology, every which way over the next couple of years in this segment, largely due to the fact that Nvidia has much deeper pockets, and they were also able to develop this technology at a much faster rate than AMD was. And so I'm not afraid of Nvidia, say, losing its top GPU performance market, and I don't think that they're going to be losing a lot of market share to AMD. I think that this is just kind of the beginning of the slowdown for all of these companies, and I've been saying it here, on this channel for the past couple of months now. I'm a huge semiconductor bull, and I love semiconductor companies, but the facts are the facts. And what the facts say right now is that economic slowdown is here, and that technology slowdown is here, and it's probably going to continue to go down for the foreseeable future. Now, so what about the stock? So looking at Nvidia right now, after the major dip, their PE sits at just under 20 right now. Their debt to equity is at a 0.2. Their price to free cash flow is almost at a 30, and their EPS over the next 5 years is expected to be at a 15%. Now, if you guys know me and you pay attention to any of the valuations that I kind of rely on here on my channel and the things that I kind of think about whenever I look into investment in a company, I would not invest in Nvidia right now at all. As you guys know, I have been invested in Nvidia in the past, and I did start a position, kind of in the middle of this major decline that the company is going through. But as of right now, and when you redo the numbers and you see like, okay, this is what's expected now, no longer going off of the extremely over-optimistic expectancies out of the company, what is a more reasonable level of, rate of return for the company to be experiencing over the next couple of years? And in my opinion, it is just not that attractive. Now, if this stock price continues to go down and the PE gets between a 10 and a 13, I would be heavily considering buying into Nvidia and, really adding into a position. However, it's currently trading at a premium for a company that is priced to grow over the next couple of years. And what kind of all the indicators are telling us is that the company is only going to be decelerating its growth from here on out. That doesn't mean the company is not going to be growing, and I don't mean the company is going to be going bankrupt by any means. However, the company is not going to be growing at the rate that people were expecting it to grow. And you see it time and time again with growth stocks. The second that these numbers start to invert and people start to being less optimistic and they start to be more realistic or even pessimistic, these companies get hammered. And Nvidia, in my opinion, still has a long way to go. If the current forecasts are turned out to be true, or even they were too optimistic still and the company's results are even worse than they are, this company can drop another 30 to 40%, no questions asked, and that is not even including the fact that if we hit an overall economic recession, which in my opinion is more than likely to happen over the next 5 years. So in my opinion, Nvidia is not a company that I would be buying right now. I know a lot of you guys are Nvidia's shareholders, and I know a lot of you guys believe in the company over the long term. I personally just do not think that right now is a good time to buy the company. Yes, if you have an absolute, 20 plus year time horizon, and you are willing to, continuously buy into Nvidia no matter how low it goes, and you have the amount of capital and the amount of time required for that, yes, I still think Nvidia is a great long-term company. However, if you're someone like me and you try to be a little bit more precise when you make your investments, and you really like the idea of actively managing things, keeping up to date with companies, and thinking about, okay, now is a clear indicator that the trend is reversing, or now is a clear indicator that the company is going to be more profitable. I personally do not see anything like that right now, and so I am personally keeping my hands off of Nvidia. So that's my update with Nvidia's updated guidance, and let me know what you guys think in the comment section down below. I know there's a lot of controversy and a lot of communication here on this channel, especially about semiconductors, largely AMD, Nvidia, and Micron. But I'm really interested to see what you guys have to think about it. You guys might have some points that I have completely overlooked, and I'd love to hear about it down in the comment section down below. And thank you guys for watching. I hope you guys enjoyed the video, and I will catch you in the next one. Peace.